Kristen, I want to come back to you because as you were speaking there before the meeting, I found myself thinking, well, what you're saying sort of sounded to me like the market was expecting more than the Fed has indicated it is likely to do. But as Steve pointed out, now it looks like the Fed has come closer to what the market has been expecting.
That's exactly what I heard as well. So, the question going into this was the Fed going to meet the market or was the market going to meet the Fed? And it looks like the Fed has kind of bridged that gap in terms of meeting the market at least, 3/4 of the way in terms of what was priced based on the dot plot. I think that, some of the things that we're going to look for within the press conference. So obviously these comments about inflation and the first nod to inflation coming down and recognizing that we've seen that in the data. We know some of the lagging components, when you take out shelter, we're actually at that 2% target in CPI. And so a lot of people are looking through to that underlying data. So the fact that the Fed has acknowledged that, I think the interesting thing that we have to look for within the press conference, though, is given the comment that was just made about how far the market has come, is Chair Powell going to give any commentary about the loosening of financial conditions, just given the market rally and also the movement that we've seen in rates as well, which then kind of brings us full circle in terms of really the timing of this first cut next year.
John, let me turn to you because it appears that in their forecast for the economy next year, the Fed governors as a group are coming to where you are. That is a slowing economy, 1.4%, which is a lot lower than it's been this year.
Yeah, and I think that's especially true on the inflation side, where it sounds like they did downgrade their core PCE forecast. I think it's mostly about inflation here. I think that the tightening or loosening of financial conditions may or may not be appropriate, but as long as inflation is lower, that's what the Fed's going to respond to. The Fed's a bunch of economists. They have an inflation mandate. They're focused on inflation. The news on inflation has been good, and I think they're reflecting that here. And should that continue to be the case, I think they would reflect that through lower rates over time. So I think it's right to focus on inflation. I think that's the takeaway today, and I think that's going to be the takeaway going forward, is the improvements on inflation are significant. They're being reflected in the meeting today, and they will continue to be reflected, should they continue through lower rates in the future.
Stocks across the board are up about 0.5%. The 10-year note around 410. And I think someone made the point earlier, Steve Leisman, that, falling rates and these kinds of things help ease financial conditions, whereas previously rising rates were tightening them. My question to you is going to be, now that the Fed has moved to where the market is, does the market just keep moving further into pricing in yet more rate cuts or more loosening or more easing of financial conditions next year?
Yeah, Kelly, that's just a bit of cable television ESP right there, because that's exactly what I was going to talk about. That here's what happened. The Fed moved to the market, and the market moved away and further from the Fed. I was actually looking at the probabilities for March, which had been, around 40% probability for a cut. It's now 62%. For May, it's 90 basis points. And I hate to do this live on TV, but yeah, there's the January 2025 contract, which sees 4.05. So there's about 135 basis points of rate cuts built into the futures market. That's the problem. And we may be back to where we were again, where, okay, the Fed is taking a move toward the market's taking a move. The Fed's taking a move towards the market, and now the Fed may have to rein expectations back in. Again, we're going to have to watch the data. The inflation data, John is right, is what's going to determine what happens here. There are good reasons to expect it to come in, but the data actually needs to perform for the Fed to do what the market wants it to do.